Gentlemen, I'm Shilpa Abraham, the moderator for today's earnings call. I welcome and thank each one of you for joining us today for the Q1 fiscal year 25 earnings conference call of Punjab and Sindh Bank. Please note that this conference is being recorded and all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the opening remarks by the management. Should you need any assistance during the conference call, please raise your hand on the WebEx panel or press star 3 hash on your phone. I repeat, should you need any assistance during the conference call, please raise your hand on the WebEx panel or press star 3 hash on your phone. I would now like to introduce the management of Punjab and Sindh Bank. We have with us today Shri Swaroop Kumar Saha, Managing Director and Chief Executive Officer, Shri Ravi Mehra, Executive Director, and Shri Arnab Goswami, Chief Financial Officer. I would now like to hand over the conference to Shri Swaroop Kumar Saha, MD and CEO of Punjab and Sindh Bank for the opening remarks, after which we will have the forum open for the interactive Q&A session. Thank you, and over to you, sir.
Thank you, Shilpa, and good afternoon to all of you who have joined for this Q1 earnings call of Punjab and Sindh Bank for the financial year 24-25. So our board has approved the Q1 performance of the bank and has been on 26 July. And already you must have all got an opportunity to go through our results and the presentation. However, in view of setting the context of today's interaction with all of you, I would like just to, in brief, tell you some of the key highlights of the bank for the Q1 of FY 24-25. The business of the bank grew by 7.10% and stands at 2,08,331 crores, a growth of 7.10% on a YOY basis. Deposits have grown by 5.59% YOY, and the deposits of the bank stands at 1,20,593 crores. Advances grew by 9.24%, and it stands at 87,738 crores. The retail agri and MSME advances, which we are focusing on as a part of our revised business model, has grown at 15.69% YOY. The net interest income of the bank has grown by 15.18%. The operating profit YOY has grown by 23.35%. The net profit of the bank has grown by 18.95% YOY. And on a sequential basis, the net profit has grown by 30.94%. The net interest income has grown by 23.37%. The gross NPA, with thanks to the recovery efforts of our department, has now been reduced to 4.72% as on 30th June. The net that shows a down reduction of 208 BPS. The net NPA has gone down to 1.59%, a reduction by 36 BPS YOY. The bank's capital adequacy remains healthy at 17.30%, which shows 11 BPS growth YOY. In terms of some of the other salient features of the bank's performance, we'd like to mention that the CD ratio of the bank has improved to 72.76. And we all know that the banking system is undergoing some challenges in terms of deposit growth vis-a-vis the credit growth. In our bank also, our CASA though has grown at only 5.36%, which is in line with more of the other banks also. The retail term deposits has shown good traction, and in the June quarter, we have seen that the retail term deposit has grown by 10.15%, which has helped the bank for reduction in the bulk deposit ratio of the bank. So we will continue to focus on mobilization of retail and CASA deposits. We have taken out a lot of campaigns, we have repriced some of our deposit products, and we will continue to move to the market for garnering fresh CASA and retail term deposits. In terms of the advance book, while the overall gross advances grew by 9.25%, the retail grew by 23%, agri over 9%, and MSME at 13.60%, which has helped the bank, which we have said earlier, that the bank is now moving towards a RAM-based credit growth. So the percentage of RAM to the total advances has now improved from 51.73% of March to 52.49% as of June 24. In terms of the some of the other areas, our credit profile continues to be healthy. Our asset quality also remains looks pretty good and sound also. In terms of the core fee income, our core fee income grew by 14% YOY in the June quarter. One in terms of the advance growth, I would like to mention that while the overall advance has grown by 9% plus 9.24, the average we are focusing on average growth. So the average of the retail agri MSME on a Q1 to Q1 has grown by 12.56%. So that's a encouraging sign for the bank. We're able to translate our objectives and products and services so that we improve our average RAM growth. Our slippages have been contained in this quarter, and so therefore we feel that the slippages has been only 276 crores in the June quarter, which is against 451 crores of June quarter last year and 370 crore of March quarter. So our collection efficiency has been given a lot of focus, and it is now paying dividends in terms of some of the containment in the slippages front, particularly on the agriculture and the MSME front. The yield on advances has improved to 8.70. One important, of course, development sequentially is that we have been able to reduce the cost of deposit from 5.71 to 5.64%. 5.64. So that is how we are managing our liquidity. The NIM has improved to 2.69. Both it has shown improvement on YOY and on sequential basis. The return on assets was at 0.50. The cost to income has marginally reduced to 69.67, and overall the capital adequacy still remains healthy at 17.30. On the digital front, we have been taking a lot of initiatives to improve our digital traction, and a lot of value-added services are being added every day in our system. The apps Google Play Store rating of Punjab Bank unique is today at 4.60, which is one of the best in the industry. So we'll continue to work on that direction and try to improve our services through the digital mode, which will also reduce our operation cost and give much more value-added transactional satisfaction to our customers. Our endeavor to expand our branches will continue to happen. As of now, we are having 1,569 branches. We have opened branches of 5 of the first quarter. We are having a plan of increasing branches by 100 for the entire year. Our ATMs will also be increased as we go along, as we open new branches. The branches primarily will be focusing on the semi-urban areas and the urban areas other than the northern belt. We have identified 100 potential locations for that. BCs, we started off 357 BCs 2 years back. Now we are having 2,000 BCs, and we intend to bring another 2,500 BCs by the year end this year. So that will expand our delivery network through the corporate BC network to a large extent also. And on the new developments that has happened on the CASA front, we are organizing a lot of campaign for that. And as far as the enablers are concerned, we have signed a MOU with the Indian Army to garner defense accounts. We have brought in the mutual fund fintech WillTech partner for demat accounts, which was an earlier announcement in 22-23, which has now been fructified. Is working very well. We have tied up with Maruti Suzuki for digital car loans, and we are also trying to collaborate with reputed institutions like IIM Amritsar, ISB Mohali, and Punjab Agriculture University to garner more and more fresh ideas on innovation, on agri innovation, on innovation of financial inclusion, and we will continue to explore that. As far as the other areas of, we are taking a lot of measures on cyber security, uh, and uh, and having a robust IT infrastructure in the bank, and we'll continue to invest uh, as per requirements, so that we are able to create a future ready uh, bank, and also which will also be equipped to handle the future IT challenges that may crop up at any point of time. So that was a brief of our bank's performance of Q1. And now over to you, Shilpa, and we can take the questions as they come.
Thank you, sir. We will now begin the question and answer session. Ladies and gentlemen, we will wait for a moment while the question queue assembles. I request the participants to limit their questions to two per person and please rejoin the queue for any additional questions. Anyone who wishes to ask a question may raise their hand by clicking on the raised hand icon on your WebEx panel. For those who have joined us via audio call and wish to ask a question, please press *3#. If anyone is having connectivity or audio issues, you may share your questions on WhatsApp to us at 790-743-1859. I repeat, if anyone is having connectivity or audio issues, you may share your questions on WhatsApp to us at 790-743-1859. Before asking the question, I request you to please introduce yourself and your organization. Our first question is from the line of Mr. Shoaib from PNB ISL. Sir, please go ahead.
Good afternoon, Mr. Sohail.
Mr. Shoaib, are you there? So we will move to the next question. The next question we have received is from Mr. Bimal Panchal from Bimal Panchal and Associates, who has asked whether Q1 FY25 trend will continue for the year.
Yeah, we expect to keep this momentum going as we have done in Q1. Shilpa, over to you. Am I audible?
Yes, sir, you are. So we have received another question from Mr. Godwin and Sons. What measures are being taken by the bank to more than double the BC network this fiscal year?
Yeah, as you all know that the bank was earlier having the model of individual BCs, business correspondents. We have moved from the individual BC concept to the corporate BC model, and in a public sector bank there is a process of onboarding such corporate BCs. So last year we had one single corporate BC which we empaneled in the bank, which has spread the network to 2000 in 2000, and the corporate BC themselves uh, have employed 2000 BCs under their company. And having learned from the experience of the first experience, we have now completed the RFP process for the second round, and we will be onboarding a few more corporate BCs, so that every BC corporate BC is able to cater to uh, every part of the country is catered by some BC or the other, because we do not have BCs who are strengthening in a pan India basis. So we need to expand the basis PC. Some may have a good traction in the eastern part of the country. Some may be good in the southern part of the country. So we will be onboarding a few of more, so that our entire pan India basis can be catered. The Northeast is another area where we need to have BCs. So we have taken various measures, and maybe after learning from the experience of this 2,500 also, means 2,000 plus 2,500, that is 4,500. In the next fiscal year, we may uh, go for further another round of 2,000, which we had announced earlier, that around we expect to have 6,000 BCs by the end of March 26.
Thank you, sir. We have an additional question from Mr. Godwin and Associates. Sir, please go ahead with your question.
Hello, am I audible?
Yes, please.
So I also wanted to ask you what new products and services the bank has planned to add in the PSB UNIC app in the current fiscal.
Right. See, we just to keep a bit of a track on our progress on this. You all know that the bank went through. Bank had this unique PSB unique app for for around 2 years or so. In fact, 3 years. But we were constrained by the technology platform that we had on the CBS side. So our CBS had a earlier version of 7, which was constraining the further value-added services which are presently required under the present ecosystem. So once we have had the Finacle 10 upgradation done, our unique app is now having a robust platform. We are now trying to use it in different directions. As I have just announced that it is in the presentation also. While the existing services, along with the existing services, we have now brought in the DMAT services in the PSB Unique. We have brought in the SIP mutual fund investment process, which is very simple in through this process. It is integrated in my bank's PSB Unique. We have brought in government PPF account opening. We have brought in government accounts like Sukanya, Samriddhi. Another constraining factor for our current account mobilization was today private banks are providing a lot of value-added services for the current account holders in their mobile app itself, like transfer of bulk business bulk transfers, debits and credits, which we were unable to provide. Now the system is enabled to a certain extent to provide those value-added services. We will be bringing in much more a very much refined uh, current account corporate biz app, which will cater to exclusively for my current account holders. And we are also trying to bring in some of the other value. We have already provided, like some of the, if you see in some of the apps, you will get a free credit score. So free credit score, you can download a free credit score from in my app. You can also download your CKYC number in your app. Suppose you are having a bank account in our bank, you can get the CKYC number free in my app located. So there are a lot of other projects which, as we move on in our systems, we'll try to bring in a lot of other areas of value-added services. We think will add bring some traction in the attracting young customers in the bank.
Thank you, sir. Our next question is from Ms. Saloni Shah from Lime Waters. Her question is, what is the NIM guidance for fiscal year 25?
Our Q1 NIM was at 2.69, so we intend to keep the NIM at between 2.75 to 2.8 for the March 25 year end.
Thank you, sir. We have received another question on the chat from Mr. Ashlesh. His question is, can you explain the reason for rupees 4,000 crores to net worth due to the shift to new investment guidelines?
Yeah, I will try to answer part of it, and part of it can be answered by my treasury and CFO team. Let me see how much I can explain. You are all aware that the uh, RBI has taken out revised guidelines on the treasury valuation of our treasury book book that we have, and that that calculation also is well defined in the RBI policy. So as per the policy, we are having a recap bonds with us, 11,000 crores, 11,072. 672 crores of recap bonds. So as per the accounting norms and as per the Reserve Bank circular, this has been the 4,200 crores has been adjusted or adjusted with the general reserve of the bank. So that's how the accounting happens, and this is across. If you see, all the banks have done this process uniformly with them.
Thank you, sir. We are receiving few more additional questions on chat. Our next question is from Mr. Hetal Gandhi, an individual investor. His question is, just wanted to understand about the recent RBI draft LCR norms for additional 5% runoff for retail deposit. So going forward, how much impact will it have on our bank's earnings?
Yeah, I think a lot of studies have already come out regarding and the banks as a whole. It's in the public domain, and the overall bank scenario seems that anything between 10 to 20% is the range in which the banking system will be impacted. Our back of the envelope calculations has shown that our impact would be between 10 to 12%. But we are sufficiently cushioned at this point. Normally, we maintain LCR around 130%, so we are adequately cushioned, and we'll take. And this, as now the draft circular has been issued, I hope I think a lot of feedback will go to the regulator on the circular, but it comes to effect from 1st April. But we'll take cognizance of that and accordingly take our liquidity measures according. But as of now, we are well cushioned to that extent.
Thank you, sir. Our next question is from the line of Mr. Sushil Choksi. So please go ahead with your question.
Punjab Bank.
Yeah, good afternoon, Mr. Choksi. I cannot hear you.
Can you hear me now?
Yeah, now it's better. Now it's better. Yeah.
I'm starting from slide 22. You gave a guidance on net interest margin that you will maintain around 2.75. Can you give the guidance for the rest of the graphics?
Yeah, sure. As far as the return on assets, we are at 0.50. We intend to have it between 0.65 to 0.75 in that range. The cost to income ratio we will gradually reduce. We will bring it down to below 60, below 69% by the end of March, and maybe if possible below 60, below 68 also. But it will be between 68 to 69. Return on equity also we will try to move forward between 9 to 10%. That's the range we are working on.
Sir, can I understand why our cost to income ratio on a sustainable basis? I'm only asking from the tenor which you have taken over. Under the able leadership of yourself and Ravi Mehra, can't go down to 60 and even 55 in next 2 years or 1 year.
Sorry, Choksiji, I could not get the final question from you.
I'm asking yourself and Mr. Ravi Mehra, under the able leadership between two bankers who are doing well at the bank, why our cost to income cannot show towards 60% in next 2 years?
Yeah. Overall, if you look into the time span of next 2 to 3 years, we feel that the bank is in a position by in the next 3 years time span to bring it around 60 to 62% by another 3 years down the line. The only challenge that the bank was facing in this transition period was augmenting income. And that is what you will find that slowly, the last year's impact, of course, was particularly due to the wage revision impact that we had. If you take that as a one-off impact, incident impact, the cost to income ratio last year was 65.69%. So, but notwithstanding that fact, we need to augment our income very, very quickly. So therefore, now we are creating pipelines for our credit growth and trying to increase our fee income, trying to mobilize our resources because we are constrained by a low CASA, and we are constrained by a very, very competitive environment in the corporate segment, which is very, very demanding. So we are going through a process where we have to balance the LCR calculations along with the what sort of deposits we take. So one of the churning that has happened in my liability resources is that while my bulk deposit percentage was hovering around nearly 22-23% one point of time, has now come down to 16% in a matter of 2 years down. So that is a very, very important segment on which my bank's overall future growth will depend upon. So we did a lot of working on this first to get out of this bulk deposit phenomena and try to focus on the retail term deposits. So once my deposit liability starts coming into the bank, in spite of the challenges that are happening, you will find that my cost of deposit on the Q1 has come down sequentially, which shows that we are able to manage my resources well. So that one is the big income growth that was not coming into the picture, because ultimately the big income would come if I grow very heavily on the corporate side. I'll get squeezed in my margins to a large extent. So we are balancing it. We are trying to go for a sustainable growth and in a very calibrated manner. That's why I said that if you see my RAM advances growth, which gives me better yields than the corporate segment, that is growing at a 12% plus trajectory, and which is giving me yields also in return. So we expect, yes, that's a pain point. Our low CASA and our high cost to income are the two areas we still need to work very, very strongly. My team is working. Mr. Mehra is also leading his team very, very efficiently to bring that down. But as we move on, we will try to because any jerk coming into the CIR. You remember in a 3 year, if you go back to history for 3 to 4 years back, my cost to income ratio was as high as 75%. And we were able to bring it down to 64, 65. But of course, the wage division impact, and we were unable to supplement with the growth trajectory. That's why this suddenly again has gone off track a bit. But again, now we are slowly bringing it down. We assure you that we are very focused on the cost to income ratio factor, and our board is also monitoring very, very strongly. And we have done some strategic thinking. So I'm very sure we will be able to come out of this. We have come out with many other challenging areas on the asset quality front, on the other areas. However, this is another challenge we still need to overcome.
Thank you, sir. Our next question is from Mr. Ashok Ajmera. Sir, please go ahead with your question. Mr. Ajmera, can you hear us?
I can hear you. Can you hear me?
Yeah, Mr. Ajmera. Good afternoon.
Good. Thanks for the moderator remembering me, because I was the first one who raised the hand for the question. But anyway, nevertheless, thanks for the opportunity given. Sir, my again, my major question is, sir, on the credit growth side, which I think in this quarter is around 2%. And you said that we are constrained by the corporate credit, and so can we not look at some mid-sized corporates rather than the large corporates for our credit dispersal? And again, my question, as usual, being a small, having a lower base, we have a lot of scope to grow our book, in MSME and mid-corporate. So what is change on that as far as the bank's policy or the view is concerned?
Yeah, Mr. Mehra will answer.
Good afternoon, sir.
Good afternoon,
sir, we acknowledge that our year-on-year growth for corporate is around 2.9% only. But having said that, we are not averse to the corporate credit. It was a conscious decision, as MD sir said, that we were balancing it towards the RAM segment because of the better yield opportunity available. Subsequently, what sir said that we have got a reasonable pipeline as well as of now for the year, maybe somewhere around 6,000 crore rupees. So I hope that this is going to give us a reasonable, you can say, stable kind of growth in the corporate segment as well. With regard to your question on MSME, definitely we are working on modernizing our products as well. We have rebalanced our portfolio towards MSME as well. We are looking for some mid-corporate branches. We have designated some of the branches in mid-corporate. And more importantly, focusing on the STP journeys for MSME as well. Shortly, maybe within a span of 2-3 months, we'll be in the market with some STP journey for MSME.
Yeah, because I would like to see Punjab and Sindh Bank to be in the range of 14 to 16% overall credit growth. I mean, that will basically make the difference. Otherwise, on the asset quality, you have improved a lot. Our gross NPA now is under control. Our net NPA is also under control. And on the whole, the profitability is also good. I think in order to go to the next level, we'll have to think on that. And as you said, yes, with all these efforts, our credit portfolio should increase substantially. Thank you very much with that.
Mr. Mehra, I would like to also supplement what Mr. Mehra said to be more, to give you a vision of what we are thinking. Our co-lending portfolio is also showing traction. We are moving very strongly on the MSME. If you find this time our MSME percentage growth has been 13%. We were having a 6 to 7% growth in MSMEs earlier. So co-lending is one another opportunity of working very strongly. Trades platform, we have increased our portfolio to 800 crores in trades platform. That again builds up the MSME portfolio. We're also looking for direct assignment opportunities where we're looking for retail and MSME portfolios. So these are the three segments apart from the core business growth from our own network. These are some of the other areas. I think what you are visualizing for this bank, we can achieve it very, very strongly.
All right, sir. Thank you very much. Thank you.
Thank you, sir. Our next question is from Ms. Saloni Shah from Lime Waters. Sir, her question is, how will the funds planned to be raised through QIP in H2 fiscal year 25 be utilized to support the bank's growth?
Yeah, of course, the QIP will not only help. In fact, we have given the disclosure that the bank has now got an approval around 10,000 crores overall in 2,000 crores of QIP, 5,000 crores of infra bond, and 3,000 crores of 81/Tier 2 bonds. So we are having now all the approvals in place in terms of internal approvals in place. We'll hit the market as far as whenever we are in a position to take all other approvals. So these sort of areas will not only allow our LCR be under control, it will also help us to grow in our credit and also take care of our future IT investments that you are going to have. In fact, we have a plan of around for the next 3 years. We have already chalked out a plan of around 800 crores of IT investment spread over 3 years. So, and those are very important sort of investments which are required just to sustain the ecosystem that we are working on. So the QIPs or the capital raising that will happen will not only be utilized for the future credit growth and also utilized for the future IT investments, which will also require capital.
Thank you, sir. Our next question is from Mr. Mahesh. His question is, the valuation of the recapitalization would have been done at fair value. Why would it have such a large impact? 2, can you sell these bonds given in open market? If yes, would that result in an actual loss? And just to clarify, he is also asked, how could you have a loss of rupees 4,250? So sorry. How could you have a loss of rupees 4,250 crores on a face value of investment that is at 11,672 crores?
Yeah, my DGM Treasury, Madam Mahima, is going to answer this.
Yeah, good afternoon. The bank has total capital bond of 11,672 crore. As per the new investment policy, that has to be valued at the fair market value, and the valuation was around 7,200. So the balance has to be routed to the general reserve. So it's not a loss; it has a notional that has to be moved to general reserve as per the new investment guideline. So that we have moved, and it cannot be sold in the open market. It will be gradually the value will be increased, and it will be again reached to its actual value of 10,100 crore or 11,672 crore. So it's not a loss. It is as per the investment guideline which we have moved to the general reserve.
Thank you, ma'am. Our next question is from Ms. Muskan. Ma'am, please go ahead with your question.
I would like to know regarding our agri exposure has reduced quarter on quarter by roughly 2.5%. So what could be the reason for that?
Agri exposure. Yeah, Mr. Mehrama.
Yeah, good afternoon, ma'am. Actually, we agree that we could not grow in agri because of, you can say, we are primarily concentrated in Punjab and Haryana. And to cover up that gap and achieve the PS targets as well, so we are moving towards other aspects, and we will be focusing other than KCC and agri farm loans. We have tied up with some equipment manufacturers like tractor manufacturers and other things. We are also looking for the opportunity towards co-lending in agriculture and MFI financing.
And there is a,
Thank you.
because of a presence in Punjab primarily, there is a seasonality of fluctuation in the agriculture, particularly the KCC account, where the availments happen more in a biannually methodology. So that's how the figures fluctuate a bit. But we were again growing at a lower pace in a YOY factor earlier. Now at least we have reached 9%. We'll take it forward to a double-digit growth in the next few quarters.
Thank you, sir. Our next question is from the line of Ms. Shivani Kumar. Ma'am, please go ahead with your question.
Hello, sir. My question is, I just wanted to understand the breakup of retail loans between urban and rural areas. Also, going forward, from which area you are expecting more growth?
Yeah, do you have it now on the retail area?
Ma'am, as of now, I don't have the data of the bifurcation of retail loans in different areas that we can mail you separately. But with regard to the growth aspects in retail loans, definitely we are looking towards home loan and auto loan and personal loan as well to augment the growth.
Thank you, sir.
Yeah.
Our next question is from the line of Mr. Sushil Choksi. Sir, please go ahead with your question.
The first is you should, as a moderator, allow 2 questions per person. I think you're abrupting the call when the question Q&A was not over. Sorry for intervening on your subject, but I think you need to monitor that.
Choksi will take care. Yeah, fair enough.
Yeah. Second thing, sir, when I was taking your guidance, you know, you've highlighted that you will get into co-lending or you will do retail. But what steps have you taken within the bank? Because there is no better time for your colleagues and employees at PSB than what is prevailing in last 12 months or 24 months on all counts, where business possibility is concerned. CD ratio of a bank can easily move up with all kind of products which you're emphasizing. So was that difficulty with technology? Was it because of something else that we can't improve quarter on quarter to get to that pace at earlier than what you desire on paper?
Yeah, I think that's a relevant question, Mr. Choksi. I'll try to answer that. You're right that a bank of our size, the CD ratio can be improved much faster than what we have been doing. You're absolutely right in that segment. But what I personally feel is that, having understood the bank, we have to create proper systems and underwriting processes before we actually do some leapfrogging. And this is the area where we are plugging for the last 2 years. We didn't have a very effective credit delivery structure. which we have now implemented in the bank. We didn't have proper, we had something, but we didn't have a proper underwriting mechanism for augmenting credit growth in the way you are expecting to happen. See, while aspiration is all we look forward to, we also need to realize that the ground realities of every organization has its own legacy, which we need to carry forward. And transforming things in a knee-jerk manner may not get the desired results. So what we are primarily looking into now, see a bank which 4 years back was having a corporate credit percentage of 55% and a RAM percentage of 45%, and suddenly two big NBFCs go down in the market dynamics, and suddenly the balance sheet goes topsy-turvy in the bank in a whole. And and we cannot go into that trajectory again. So now from 45, 55, 45, if I have to bring down to a reversal, a role reversal in the bias towards the RAM segment, the bank needs to go through that pain point of creating proper structures in place, proper personnel in place, proper monitoring in place, proper digital infrastructure in place to augment finance in that. And you will appreciate that in spite, and if you see how can a bank have a retail NPA of more than 3%? There was some issues which we need to address. So those issues have been addressed over the last 2 years by creating proper credit underwriting officers at the back end, which is giving a very healthy sign that the future delinquency of those new sanctions that are happening over the last 2 years are under a reasonable level. So that platform has to have the base. I can easily increase my book at 20% at this point of time in the leads that I have, but is that sustainable? So the bank's own legacy, number one. Number two, the position where we stand at this point, and the future in which we want to take it forward, so that we don't go through a process of 2018 to 21, where we got into a lot of a problem, and the bank went into a serious shrinkage mode of the balance sheet. If you see, from 2018 or 2017 onwards, the bank was in a shrinking mode, the balance sheet. For a bank of our size, any small value here and there can create havoc in the overall figures. So that's why it's better, I personally feel, though it's a pain we go through, but transformation goes through pain. And if this transformation is to be a sustainable one, we need to create proper systems first before we go into the big league. And my team is really working very, very strongly. We have taken CXOs from the market. We are taking specialized positions from the market. We are increasing the capacity of our top executives, sending them for adequate good trainings in India and abroad. And these are all investments for us. And remember one more thing, our technology, of course, was a damager in this entire story. If I have to augment credit growth aggressively, I have to have a very strong system. So now, I think by 15th or 31st August, we are going to grow digitally in 4 or 5 areas, and which will be the most updated system in the entire industry. We were able to crack the defense mechanism through at least an MOU, which was not there. So many banks are with Indian Army. So now we are getting traction actually on the ground to open defense salary account, which is a great boost for this bank. We are now progressing on other salary accounts. We have created new current accounts products. So all these collectively today, my people are on Saturday, Sunday now are in the field for deposit mobilization. So deposits has to come, or credit has to be augmented. So we assure you that through all the sustainable measures that we are taking, the bank is slowly, steadily moving in the right direction.
So my next question is, if treasury yields are nearing 6.9 and if it heads between 680 and 685, would you take adequate profit to deploy money in view of the current CASA issues and bulk deposit rate towards credit, which is yielding over 9%?
See, we will take the profits as it comes. We are having sufficient cushion to build on this yield curve movement, which is a positive sign. But if I see my credit growth can be managed either by my resources or for my borrowings, or one process is reduce my investment book. So I'm not in a position. I'm not at this point thinking of reducing my investment book because of the situation that is coming. We need to continue to leverage this yield movement curve and try to supplement the credit growth through our other means, if not the CASA retail, then the infra bond and the other bonds. But first, we'll try to go with the infra bond in the market. We'll see how it hits the market and what pricing we are able to manage it. So we'll try to build this credit growth on the platform on the fundraising that we have now talked about.
So can I take one more question?
Yeah, please.
So the technology spend which you mentioned about 800 crores, this is for the year or
No, the next 3 years.
Next 3 years. And when you mean by technology spend of 800 crores, what kind of products and initiatives are there comprising?
See, overall, I'll try to give my GMIT will also supplement. They say on technology, we are trying to build a very state-of-the-art call center. Okay, so that is a 6 months project from now on. We are trying to build the centralized trade finance module, which another 8 to 10 months project is on the pipeline. We're trying to increase our servers. We're trying to increase our cyber security measures, which has become very important. We are also going to implement the back office structure for mobilizing CASA accounts. Again, that's a big project for the bank. We have been talking on this before also. This is another around 6 months. It is now very in a very advanced stage now, but it will take 6 to 8 months time. All which entail cost. This is around a 1 year, 2 year. This cost maybe around 200 crores, 150 to 200 crores is for these 1 to 2 years. And the long-term projects, a data warehouse, we are going to go for a data warehouse project again, which is going to become a big important development for the bank, which will also give us the leverage to leverage our own data and CR management for leveraging our own captive data. So data warehouse is a big project which will entail a significant cost, which is a long-term project of around 3 years. So that's the long-term project that we are there, and the others are all, as I said, some of the projects will be between 1 to 2 years.
Stock prices, thanks to limited float, is expensive. How do you plan to propose to do your QIP or follow-on offer, whatever products you may envisage based on government support?
Sorry, I didn't get the last part of your question.
It's based on the float is very low, so the
Correct.
stock price is pretty reasonably priced. Looking at a book value, which is approximately at 20 rupees, and government is not likely to do OFS, and you may have to increase your capital, which is not a necessity, but you are forced to do it because you have to dilute as per SEBI.
Yeah, absolutely.
In such environment, how will you meet your criteria when the market is not conducive because of price to book or market cap to advance or market cap to deposit?
Those are the constraints, practical constraints we may face. But as you said also that one factor that is driving this concept is, of course, the regulatory side that we need to dilute, and many other banks are also coming into the market maybe in the same period of time. Other banks have also announced their intent on QIP. But we are talking to some of the potential investors. We have started talking to them. It is not that it is a very bleak picture. It has some green shoots, the picture that we are getting from the market, and reasonably we will try to hit it as we feel and when it should be hit in the market. So we feel that it is possible. We are confident that we can raise this in spite of whatever you said. Because there is a positive atmosphere for PSBs as a whole, and both nationally and internationally. So we'll try to encash that sentiment, notwithstanding.
I'm not negative on PSU banks. My observation is based on the current float and the pricing mechanism, and it is very clear that yourself, that is PSB, IOB, Bank of Maharashtra, Central, all will hit the market in more or less similar time zone.
Yeah.
And because of the crowding, how do we manage that? That was more a question.
Yes. That's the key point. You're absolutely right. I agree with you that the timing would be very key to us. And once the merchant bankers are on board, we'll have this discussion internally and see what we can do about the timing of the issue. But this is a 1 year project that we have in mind. The approvals are for a 1 year period, so we will take that into that consideration while setting the time for
my earlier questions are more directed to this achievement. You successfully do it, and that is what my wish is.
Yeah. Thank you.
Thank you, sir. Thank you for answering all my questions.
Thank you.
Thank you, sir. We'll just take another 2 questions. One is from Godwin and sir. So please go ahead with your question.
Hello.
Yeah.
Sir, am I audible?
Yeah, you're audible, please.
So my question is, what factors influenced Punjab and Sindh Bank's decision to open 100 new branches this fiscal year, and which regions other than the northern region are being targeted for the new branches?
Yeah. See, you must be knowing that our branches network is very much skewed to the northern part of the country. So around 42% of our network existing is in Punjab itself. So now we are trying to open branches in areas which are other than the northern belt, primarily in the central and southern and eastern side and the western side. So that would be a guiding factor for the bank. And also we are looking more into the urban and semi-urban areas where we have got good studies within ourselves regarding district-wise business that are available in the country. And according to the study that we are having, we'll identify the districts where we can penetrate, where there is a scope, viability of opening new branches. We are presently we are present in around 335 districts of the country. So there is a long list of uncovered districts that our bank can penetrate. So primarily, other than northern belt, we will be focusing on south, eastern belt, central, western. Western means Maharashtra, Gujarat. When I say Rajasthan, UP also, eastern UP also we may look into. Northeast we have some scope we can still look into. So these are some of the 100 potential areas that we intend to open.
Thank you, sir. Our next question is from the line of Mr. Saket from Kapoor and Company. Sir, please go ahead with your question. Mr. Saket, can you hear us? So we'll move to the next question from, okay, so Mr. Saket is online. So please go ahead with your question.
Yeah. Sir, Namaskar, sir. And sir, if you could give us some understanding of the repricing of our deposits, that is our liability franchise, what percentage of our deposits have been repriced to the market, and how much is pending to be up for renewal?
Okay. So just give me a bit of a time. See, the repricing that happens, see, we have now taken out special products for maybe 333 days, 444 days, 660 days. So the existing earlier, these sort of special products are getting repriced at the current level. But in spite of that, I think the question that you are trying to get into is what is the impact on the cost that is going to happen.
Yes, yes.
So yeah, I think that is what you are going directed.
जी सर, ओल्ड प्राइसिंग का जो इम्पैक्ट, जो बेनिफिट था हमको एंड में मिल रहा था, वो वेन आउट होता दिख रहा है, तो उसी के
I think what is happening, Mr. Saket, what we find now at this point of time is that this pricing impact is going to plateau now. If you see my Q1 cost of deposit, it has actually come down marginally, but it has come down. So we were finding that this traction was quarter on quarter was increasing in previous year. So there is a possibility that, which we feel very strongly, is that we are not going to repricing further. Whatever we have repriced now in terms of certain products, we are going to hold at that level. The system will automatically mold itself, the ecosystem will automatically mold itself to this new level of deposit interest rates. There will be a competition in the market to raise deposits, but I think the competition would be, the rates would be similar. All banks would be at a point will offer similar rates. So we feel that it may still have a marginal bias, positive, higher cost, maybe in 1 or 2 still quarters, but overall the traction will now plateau slowly. It is not a uphill curve that was happening on a.
So in nutshell, we can conclude that the NIMs are not under pressure. We can see the NIMs trajectory. What we posted.
The only risk of NIM, maybe not in the 1 or 2 quarters which is coming, but the NIM impact can be gauged really after 1 or 2 quarters when the LCR calculations finally come into the picture. This is a draft circular. We have done some assessment as of now, and how does it translate into our overall mobilization of deposits? How does it impact our liquidity management? That maybe we will still monitor it. As I said, the 10 to 12% is a back of the envelope calculation. We are still working on it, and for the 1 or 2 quarters, it doesn't seem to get impacted. But once it gets implemented from April onwards, and in that situation, the geopolitical situation, what it is, the current trends that will also get factored in that situation. So that much open-endedness, personally, I feel should remain open. But in the next 1 or 2 quarters, I feel that the NIM should not be under pressure.
Sir, LCR point, if you could repeat once again, sir. What does the new circular guideline on LCR, that is the liquidity coverage ratio you are talking?
Yes. What it says is that earlier.
Sir, your voice is.
Can you hear me?
Yeah. Now I can hear. Yes, sir. Please.
Yeah. What it states is that the liquidity coverage ratio is a very combination of various factors. How much of CASA we have, how much of retail term deposit we have, how much of bulk deposit we have, how much we borrow from against our additional securities, how much we take certificate of deposits. What it does, the Silicon Valley crisis that happened, the regulator wants us to be in a comfort zone if a situation like that happens. So there is no run on the bank. So the banks are told that you have to, under a calculated methodology, the outflow and inflow of funds have to be looked into, and your LCR should be, the minimum level is 100%, which is stipulated by RBI, so that you take your deposits accordingly. Suppose you are taking deposits and you are borrowing against SLR securities also, there is a calculation method under which we find out what is the LCR we maintain daily. Now, the broad factors so far was CASA, was retail term deposits, was bulk deposits, borrowings, and certificate of deposit. These are broad. There are other small. The impact of this, such things are taken into calculation, that for calculation of LCR. Now, the Reserve Bank has has gone ahead and said that if a customer is doing internet banking or a mobile banking, there is an additional runoff factor that has to be provided in their LCR calculation, meaning thereby, suppose a customer is, you are having internet banking, maybe you are yourself doing mobile banking, based on your transactions and your activation of your account, you are actually taking out money from the bank. So there is an outflow. You are doing numerous transactions on your UPI, because UPI has gone ahead in a big way. So what is happening is, RBI is trying to cushion us that, because digital transactions are now in a majority front compared to the manual transactions. So please take this. This is an outflow risk that has to happen, can happen. So whether it is an internet banking customer or a mobile banking customer, based on that, how much of an outflow can happen in a CASA account? How much can outflow can happen in a term, in a current account, and how much can happen in a savings account? So some calculations have been given, either it is 5% or 10% or 15%. Based on that, the banks now have to keep additional cushion so that the banks do not get into a breach of the regulatory guidelines of 100% minimum. Average banking system maintains some, of course, there may be exceptions here and there, but I'm talking of average and not naming banks. Average LCR is maintained between 120 to 130, 135%. That's an average. Some may be a bit low, some may be a bit high. So
from the current 100,
pardon?
From the current 100 level, we have to go to 125.
No. The minimum threshold is 100. Banks are always maintaining cushion of 20 or 30% more in their daily, because it is always better to keep a cushion, so that a situation like anything that happens, which is unprecedented, it can happen. No, unless you have a Microsoft outage.
Yes, sir. We are referring to the Silicon Valley type example, sir, that happened in where $42 billion were withdrawn from depositors at one go.
Absolutely. So as a regulator, bank RBI are asking us, what is happening? We are doing. What is he trying to say? What is the government trying to say? Is that we are aggressively growing credit. Credit के लिए deposit चाहिए. और credit अगर aggressively grow होता है, we must always have a cushion that in such an unprecedented situation, there is no pressure on the bank to pay deposits back to the customer.
Right.
So that runoff factor, technically it is called a runoff factor, which RBI has told us, has to be between 5 to 15% additional. There are calculation part in there, so we have to be careful of that.
Right, sir. And last point, sir, what should be our loan growth? How are our advances going to grow for this year and for the next year? What is the trajectory, sir? If you could give some understanding.
This year we should grow at 12 to 14, and the next year maybe between 14 to 16.
And this year base itself, what is our base on which we'll go by 12 to
around 88,000.
Okay. Right, sir. So we'll be 1 lakh in the next 2 years.
If everything goes okay, maybe in the next year itself. In this year itself.
In this year itself, right. Okay. This year itself on a base of 88,000.
Yeah, and maybe. We are trying for that. We are given a conservative guidance because the scenario changes very dynamically. But if all things go well, a 1 lakh crore advance by March 25 is not impossible.
ओके, धन्यवाद सर आपका सर सभी
धन्यवाद।
क्लैरिफिकेशन। थैंक यू।
Thank you, sir. As there are no further questions from the participants, we now conclude this conference. Should you have any further queries, please reach out to Ms. Mamta Samant at 9930625104 or mamta.samant1@denso.com. Details are mentioned in WebEx chat and the analyst invitation sent to you earlier. On behalf of Punjab and Sindh Bank, I thank each one of you for joining the conference call today. You may now disconnect your lines. Thank you. Have a good day ahead.
Thank you all. Thank you for your participation. Thank you very much. And thank you, Shilpa.
Thank you, sir.